Hi everyone. Anyone is there? No, just you. Okay. Hi everyone. Welcome today's lecture on UK taxation for business and individuals. In this session, we'll discuss the identification of key advice required for understanding taxes in specific situations, assessing tax impact, and exploring alternative scenarios. So let's get started. My name is Yasir Gulfras, and I'm your tutor for Learning Outcome 2, which is be able to assess the impact of relevant taxes in given situations. So, indicative content. In this lecture, we'll discuss several important aspects related to taxation and its impact on both individuals and business organizations. The content covered will include the following key, points: identification of key advice that is required to be supplied on the taxes applicable in a specific situations. Also, we will discuss the alternative outcomes and tax consequences. We will examine various ways to achieve personal or business goals while consider the different tax implications. This will include analyzing and comparing multiple scenarios to highlight how alternative paths can lead to distinct tax outcomes. Taxation's influence on financial decisions for businesses. We will assess the profound impact of taxation on the financial decisions made by both incorporated and unincorporated businesses entities. So this involves considering factors such as tax planning and profitability. So advantage and disadvantages of different courses of actions for individuals and both incorporated and incorporated. Then understand of statutory obligations imposed in set scenarios to include time limits and non-compliance. So here we'll discuss the pros and cons associated with different approaches taken by individuals or businesses in response to taxation requirements. This will help in making informed decisions that align with specific financial objectives. Okay. So corporate tax to include the scope of corporate tax, taxable total profit, chargeable gains for companies, a comprehensive computation of the corporation tax liability, effect of a group corporation structures, then stamp tax to include a scope of stamp tax liabilities arising on transfers or using of examples and reliefs in different and minimizing stamp taxes. Can you see my screen, Hassan?
Yes, sir.
Oh, okay, okay. And you can hear me as well clearly.
Yes.
Okay, okay, no problem. That's fine. So income tax here is some, that basically he's telling us basic rate is up to 37,500, which is 20%, and a higher rate is up to 150,000 pound, which is 40%, and then 45%. Dividend nil rate band is 2,000 pound and also 75% on dividend. Personal allowance 12,500 pound, which is exempt or personal account, and transferable amount 1250, and income limit 100,000 pound. Here car benefit percentages is just showing some chart about car benefit percentage: 50, grams per kilometer or less 16%, then 75% grams, 76 grams to 90 is a 22%, then 23% car fuel benefits. Base figures for calculating the car fuel benefit is 24,100 pound, and van benefits, then individual saving accounts overall investment limit is 20,000 pound, property income 75% of finance cost relating to residential property. Here is a pension scheme limit. You can go through and you can check percentage, approved mileage cars, capital allowance, rate of allowances. Then again, same annual investment, cash basis accounting, cap on income tax reliefs, corporation tax. So rate of tax 2019, 18, 17, 18, and 19. So was 19%, value added tax 20%, registration limit is 85,000 pound, or deregistration limit is 83,000 pound. Inheritance tax is 325,000 pound, residential nil base is 150,000, lifetime rate 20%, and death rate is 40% here. So for tax years 2021, Joe has a salary of 46,500 pound, saving income of 2,000 pound, and dividend income of 6,000 pound. So during the year, he paid interest of 300 pound, which was qualifying purpose. So Joe employer deduction 6,800 pound in pay for his earning. The income tax payable by Joe is. So when dealing with taxes, it is important to provide advice based on the situation. So for example, here consider Joe, who had a salary, saving income, and dividend income in the tax year 2020 and 21. He also paid interest for a qualifying purpose, his employer deduction paying from his earning. So we will calculate Joe income tax payable based on this information here. So employment income here, saving income 2,000 pound, dividend income is 6,000 pounds. So total income is 54,500 pound yearly. Interest 300, and also personal allowance, which is fixed 12,500 pounds. So total taxable income is 41,700 pound. So understanding tax bands, Joe's saving income nil rate is band is 500 pound. His dividend nil rate band utilize the remaining basic rate band. With these bands, many taxpayer might not have a tax liability for saving and dividends. So analyze tax advantages and disadvantages of different course of actions. Donald and Theresa are married couple and have regular annual income on followers. Donald's salary 60,000 pound, Theresa's salary 18,000 pound, interest 2,000 pound, dividends 9,000 pounds. Here it is clear from the above information that Donald is a higher rate taxpayer with taxable income of 47,500 pound. 60 minus 12,500. Theresa is a basic rate taxpayer with taxable income of 16,500 pound. 18 plus 2 plus 9 minus 12,000. So in this situation, it would normally be the case that for tax planning purpose, it would be advisable to see if any investment income could be moved from higher rate taxpayer to the basic rate taxpayer. Uh, Basically, different choice individuals and couple makes, and how understanding these can lead to advantages outcomes. So here he's talking about Donald and Teresa, a married couple with a different income. So Donald and Teresa income is obviously, as you can see, in different bands. Donald's salary is 60,000, Teresa's salary is 18,000. So additionally, Teresa has interest income of which is £2,000 and dividend income of 9,000. So Donald is a higher taxpayer and Teresa is basic rate taxpayer. So to make effective tax plan, we might consider shifting some income from Donald to Teresa, but let's see how that play out here. Next is click to add. However, it is not possible to Donald only income is in his salary. So the introduction of the nil rate band, however, means that in the above example, tax saving can be achieved if firstly £500 of the interest income could be made by Donald and therefore use this saving income nil rate band of £500 that is currently being wasted. So using nil rate bands, the introduction of nil rate bands can be advantageous. So for example, if Donald could earn £500 of interest income, he could use his saving income nil rate band of £500. So this way, the income that would otherwise be taxed at 20%, the Teresa could be saved. Additionally, transferring some dividend income from Teresa to Donald could lead to both utilizing their dividend income nil rate bands of up to £2,000. So who's there? Anyone is there?
Yes, sir, I'm here. I'm here.
No, I thought someone is because just I got message. Anyway, can you see my screen, Hassan?
Of
And
course.
you can hear me. Okay, no
Yep,
problem.
yep.
Okay, that's fine. So here we will assess the statutory obligations. Here we will explore the statutory obligations and consequences of non-compliance in tax matters. So the filing due date for filing our return online is 31st January following the end of the tax year. Are you working in accounting environment or you doing a different job?
No, I'm working in accounting environment. I have my own practice at the moment. It's just it's just getting the certificate left.
Oh, okay, for licensing purpose, you mean?
Yeah, yeah.
Okay, so you know that most of things obviously you are familiar with that
Yeah, exactly. The most of the things I'm familiar with.
yeah, so 3 months after the notice of file return was issued, if obviously when you comes to the practice or doing practical things are bit different than that theory or what we study. So obviously most of things you are familiar because this is your routine work, So
Yeah, exactly. Apart from the penalties and stuff,
yes, yes.
we inform it, but it still that depends on how the HMO and the customs will take
Obviously, I
it.
think so. Things changes every, here in UK, it's a different, they change things every day sometime, or,
Yeah, they do. They do.
you know, might be you have a different rate today and tomorrow you might be uh, get a different law obligations or rates or things, different things. Okay. So penalties are vary as well, different according to situations and different as you are talking about penalties. So they are different. There are no fixed penalties. Am I right? I think so.
Yes, yes, but there are all fixed penalties. It depends on the
Different situations
yeah, exactly. It depends on the different
depend
situation
on the
how
different
the
situation.
penalty is going to be issued.
Yeah.
They are all fixed penalties actually.
Obviously, if there are a big business or big corporations, companies, there will be a different penalties. For small businesses or small, companies will be a different. or different for different amount, or at different level, different penalties or different things will be, there. So you work for all kind of company, or you work for a small businesses?
No, all kind of companies, sir. I do have big clients. I do have small clients. I do have personal clients. So everyone
Oh,
has a different strategy.
all right. Okay. So you already got some qualification here, or I mean,
No, I have my ACCA, which is two exam left, but because of the children's and stuff, I don't have too much time to study. It needs too much commitment. Um,
oh,
you know,
okay.
putting
Yeah, that's I understand. So license purpose, you can, this is a, route you can use for license purpose. Yeah.
exactly. So this will be much more flexible for me to go through.
Yeah, understand. So, that's right. So here penalties for late filing, the maximum penalties for delivering a return after the uh, filing due date are initial penalty £100, or return more than 3 months, or £10 per day. I don't know this is still same as it is or not, but you might know, but because sometimes label says that not updated. Okay, so as I said, different penalties for different levels as well. Okay, so return more than 6 months, but not more than 12 months late, 5% of tax due, minimum 300. Return more than 12 months late, 100% of tax due if deliberate and ca- concealed, 70% of tax due if deliberately but not concealed, 5% of tax due otherwise, minimum £300 each case, for example, careless. Uh, Here in the that certain obligations are imposed on individuals and businesses. So these includes accurate record keeping, filing returns, and making timely payments. Uh, Returns penalties for late notifications. Here again is a chart about amount of penalties. Uh, Penalty rate 30%, 70%, and 100%. On prompt disclosure or prompt disclosure, so up to 30% and up to 50%. Uh, then business tax returns record must in journal, but be kept until the later of 5 years after the 31st January following the tax year concerned. Business tax record for business keeping accurate record essential. So these records helps calculate the correct tax liability and complete accurate tax returns. So also they keep record for 5 years from as it says after the 31st January following the tax year concerned. So failure to keep records could lead to penalty of £3,000 for each tax year concerned. So payment and late payment of taxes, business must pay their taxes on time to avoid penalties. Late payments can result in interest charges. So payment of account must be made on 31st January in tax year and on the following 31st July. The final payment of income tax must be paid on 31st January following the tax year. So payment on account 50% of the prior tax year's liability less tax suffered at source. Uh, Penalties are not required if the prior year's income tax payable falls below £1,000 or more than 80% of prior year liability met at source. A claim may be made to reduce uh, to a stated amount or nil. So interest and late payment of taxes, late payment taxes penalties are levied on tax payment on a final payment of income tax class 4 national insurance. As you know that there are different classes of national insurance as well. As follow, paid not more than 5 months after penalty date, 5% update, more than 5 months and not more than 11 months after penalty date, 10% of unpaid taxes, and more than 11 months after penalty date, 15% of unpaid tax. Interest runs on from normal due 31st January and 31st July. Any final payment and CGT from the due dates July, January following tax years. So, non-compliance may result in fine, litigation, or other consequences for the client that may have a matter effect on the financial statements. So basically, failure to meet tax obligations can lead to serious consequences. These might include penalties, fines, and even, some in some cases, legal actions. So when you run a business, you need to be aware of the taxes you're required to pay. One key tax is corporate tax or business tax, which is charged on the profits your company makes. This tax is similar in income tax for individuals, but applies to companies. So this means that as soon as your business starts making a profit, you will need to start paying corporation tax at the appropriate or rate. So it is very important to understand that business taxation directly affect your costs. For example, if there is a rise in corporation tax, it has a similar effect on to an increase in cost. So this can lead to higher prices within your businesses, potentially impacting your customer and overall business performance. Additionally, there are other taxes to consider, such as environmental taxes like a landfill tax and value added tax, which is also called VAT. So, a professional accountant who encounter or is made aware of matters that are clearly, inconsequential, judged by their nature and their impact. So, financial or otherwise, on the client, it is stakeholder, and the general public is not required to company with this section with respect to sub matters. Also, he says for the purpose of this act causes substantial harm is one of the result in serious adverse consequences to any these parties in financial or non-financial terms. Examples: preparation of a fraud resulting in a significant financial losses to investors, and breaches of environmental law and regulations, and and angering the health of safety of employee of or the public. So your business may become affected by sector taxes, which means it is important to ensure you are complying with any sector tax obligations. As well as this, there may be also be opportunities to reduce your tax cost. So in this blog post, we look at how taxation can affect your businesses. So basically, uh, he's just talking about how how taxes affect business owners, and what steps you need to take to ensure you are complying with the tax obligations. So if your employees don't often need to spend a lot of time thinking about tax and national insurance, as this is directly deducted from their gross monthly salary, leaving each employee with the reminder. So how running your own business is very different. It is important that you take responsibility for paying the correct amount of tax on your business profit in line with any national insurance contributions. So if you are an employee, tax like income tax and national insurance are automatically deducted from your salary. But running your own business is a different story. You need an accountant, and he sort things out for you. So, a corporate tax or business tax is charged on the profit a company make. Corporation tax is a similar to income tax, but for companies, meaning that as soon as your business starts making a profit, it needs a start paying corporation tax at the correct rate. And uh, business taxation affect a business cost, as we already discussed. For example, a rise in corporation tax has the same effect as an increase in costs, which can lead to raised prices within the business. So other businesses taxes include environmental taxes such as landfill tax and VAT, value added tax. So here is a annual accounting scheme. So uh, there are different ways to manage your business taxes. As you might encounter terms like annual accounting, uh, cash accounting, and the another one is I think so. It's yeah, flat rate scheme. So these are different methods that can help you streamline your tax reporting. So it is very important to understand the implication of each method to choose the one that suits your businesses best. So there are advantages and disadvantages. Only one return each year. Annual, turnover must not payment spread uh, evenly throughout most of the year. So disadvantages are monitor supplies to ensure the turnover limit is not exceed. Payment based on previous year's turnover may not reflect current year's activities. Yeah, again, it's a cash accounting. So in cash accounting, accounting for VAT on basis cash paid received. So annual taxable turnover must not exceed 135,000 pound excluding VAT to join. So to join, all VAT returns payment must be up to date, may also be able to use annual accounting scheme. So there are some advantages useful where a long period of credit given to customers, automatic bad debts relief. So as output, VAT will never be paid over to HMRC on bad debts, as output VAT will be paid over to HMRC later if useful where a long period of credit given to customers. Uh, then next one is a flat rate scheme. Businesses can calculate VAT due by applying a flat rate percentage to VAT inclusive taxable turnover. So the businesses must have annual taxable turnover excluding VAT of no more than 150,000 pound to join. So may also be able to use annual accounting scheme. So must leave the scheme if total turnover exceed 230,000 pound. So this is limit. So advantages simply FIS administration do not exceed, do not need to deal with VAT on purchases involved invoices, can lead to less VAT payable and discount of 1% given in first year of registration. So there are some disadvantages. Uh, Cannot reclaim VAT on purchases and expenses. You can't reclaim your VAT. So flat rate applied to all turnover, including zero rated and exempt supplies as well. And more VAT may be payable. So you pay more VAT than other two. Uh, Right. So here, evaluate how alternative ways of achieving personal and business outcomes may lead to different tax consequences. So returns. So a company must normally file its CT return by the filing due date, which is the later of 12 months after the end of the period of account, 3 months after a notice requiring the return was issued. Inquiries notice to inquiry into return must be given by 12 months after the later of the actual filing date. If filed on a before filing due date or 31st of January, 31st of April, 31st July, 31st October, next following the actual filing date, it if filed after filing due date. So Uh, specifically, he's talking about the how alternative approaches to achieving personal tax and business outcomes can result in different tax consequences. So, late filing of returns as for individuals and penalties for error as for individuals. Payment of tax quarterly installments. Large companies must pay their CT in installments. Other companies must pay the corporate tax 9 months and 1 day after the end of the accounting periods. And the quarterly installments for a 12 months installments are due on uh, months 7 and 10th of the period, months 1 and 4 of the following period, installment due on 14th day of months concerned. The upper limit is multiple by months 12 for short accounting periods divided by the number of related 51% group companies in the group. So example is limited uh, with has one related 51% group company prepares accounts for the 9 months of 31 March 16. The upper limit of this period is 9 divided by 12 multiplied by 150,000 divided by 2. So it's 562,500. Business outcomes, research and development. Uh, when it comes to the business, the strategies you adopt uh, can lead to diverse taxes consequences. For example, uh, here is consider the concept of research and development. So, research and development tax credits, businesses engaged in research and development activities may be eligible for tax credits, which can reduce their overall tax liability. So, this encourages innovations and investment in research and development. So, IR35 business results for those of you in the business sector, you might have heard about the IR35 rule. These rules are, focus on contractors and freelancers, aiming to determine their employment status for tax purposes. Depending on whether you are classified as an employee or self-employed, your tax obligations can vary significantly. Then returns, a company must normally files its corporate tax returns by the filing. It's the same, as above. Uh, Inquiries, notice of inquiries into return must be given by 12 months after the later of actual filing dates and 31st January, 31st April, 31st July, and October 31st. We'll jump into basis period rules, 3 scenarios, commencement of trade, ongoing businesses, cessation of trade, assessed using opening year rules, 12 months accounting period ending in tax year, and assessed using closing year rules. Then is opening year rules, first years in which business commences trade, assessed on profit from date of commencement to following 5th of 5 April. Second tax year, see flow chart here. So in there, an accounting period ending in the tax years, so is a 12 months long and assess on an actual basis from 6th April to 5th April next year. Then here, accounting periods. Companies must pay a corporation tax on their taxable total profit in each accounting period. So an accounting period can never exceed 12 months. If a company prepare accounts for a period exceeding 12 months, this period of accounting must be split into 2 accounting periods. Computing corporate tax payable rates of corporate tax are a set of financial years. So a financial years runs from 1st April in 1 year to 31st March in the next year. A financial year 2016 financial years runs from 1st April 16 to 31st March 17. So corporation tax is equal to 20%. Basis period for each tax year is normally the period of accounting ending in the tax year. Example, sole trader makes up accounts to 31st December each year. The basis period for 2016-17 will be the year of 31st December 2016. Again, opening year overlap profit. Any profit taxed twice in the opening years are called overlap profit. So overlap profits may be relieved on cessation. Final year overlap profit are deducted from the final year's profit. Change of accounting dates. Year of change is equal to tax year with new accounting dates. Yeah, and then if you want to read about further accounting, as well, you already know about ACCA. There are some book mentioned on ACCA website as well. So that's it today. There was a few things about corporate tax, business tax, income tax, and national insurance contributions. So that's it for today, Hassan.
Yes, sir.
Yeah, so that's it for today. Any questions so far, or you already working on your assignment?
Yes, I am.
So you are nearly finished your assignment, or you are still, I mean
No,
that.
I am on in the first task. I'm on stamp duties now. The stamp duty is nearly finished.
Okay.
All I need to include in regards to the 2022 years is about the first time buyer's bid. And then I will move to other sections. But the section one, it's nearly complete. I did inheritance taxes, capital gains taxes. I covered all BPRs, APRs, trusts, potential exempt transfers, chargeable exempt transfers,
Okay.
exit charges, basically anything that it can cover under the inheritance tax, to be honest. Is going to be for 21-22 tax year because I gave the examples based on 21-22 tax years.
Yeah, that's fine. That's fine. No problem. I believe that most of things you're already familiar with. So
Yeah,
assignment wouldn't be very that difficult for you. But still, if you want to ask anything, if you got any issues, just email me. Yasir@ukversity.co.uk.
I will
Okay.
do so. Thank you.
So I'll see you next weekend, and hopefully I'll discuss your assignment before our final lecture, So you can submit your assignment before that. There's no issue. Okay.
All right. Okay. Thank you, sir.
Okay. Thanks. And see you next weekend. Okay. Next
Thank you.
Saturday.
I see you soon.
Bye.
Bye bye.
Bye.